Hello?
Yeah, start.
Live guys, you?
Yeah, start. Yeah,
Hi AJ. Hello AJ.
Hi, how are you?
Doing great. Happy happy Friday, everybody. Hope you guys you had a great week, and hope everybody's healthy and very safe. Um, so how are you? How was your week, AJ?
The week's been very good. We still are very busy handling some of the loans we have started.
Yes. Hi guys. Everyone. This is Suren Sapkota from Los Angeles. Tonight, I have a pleasure and privilege to have AJ with me. Let me give a little bit, introduction about AJ. AJ has an MBA in finance from St. Louis University. Last 30 years, he is into the mortgage banking business. He has a very successful career. He has closed loan over 7,000 families and many businesses. He's the one of the top mortgage broker in Southern California area. Great to have you, AJ, and thank you so much for your time today.
Great. Thanks for a nice introduction. Appreciate it.
You're welcome. So right now, about last few weeks, after all this whole, COVID-19 started, I have so many questions I'm getting every day from the people who want to buy the homes, or they have a question regarding the mortgage. So tonight I'm gonna ask you a few questions, and we are also welcoming questions from the audience. All the concern right now they have, and we're gonna answer. Okay. Let me go with a couple of questions. First thing, many people are asking me, this is, how about the time, how about this is the, it is a great time for the starting the home buying process in terms of loan.
Well, is it, I would put it like, is it the right time to purchase? I would say that, especially if you are going to purchase to live, it's really any time is a right time, because that's something you're going to live and enjoy. You're not looking that for a rental income or investment. So if you have a need to really get into a property, I would suggest they should start the process now. It doesn't really matter. And people think that down the road, it may go down 20%, 30%, but that's probably not going to happen in this environment. It has been, I would say, there's a lot of scare about this coronavirus, and they think that everything will be affected. But the real estate in this environment, or the house prices in this environment, will not go down like it happened in 2008 and 9. And the main reason for that is 2008 and 9, there was so much liquidity coming from international market and local that the lenders had to loan the money out. And they had pretty much set aside a lot of these guidelines of lending, and they start giving 100% loans. People didn't even have a job, they could get it. So people just kept on buying. And when the market collapsed, they panicked and they wanted to start unloading it. But they didn't really care at that time because they really had nothing in it. So there was really no emotional issue there. So people just let it go. And that's why the prices started going down. It was loss for the lenders, not for the owners. So the market is totally different now. Now people have purchased homes with a lot of money out of pocket. Everyone pretty much have equity in it. So to say that someone just going to walk away with their equity, that's not going to happen. So my advice to everyone is, if they are looking to purchase to live, continue your search. To do that, because the interest rates are also excellent and they will be here for a while, but the situation may change a little bit. Underwriting guidelines are getting tight a little bit. because the the lenders are experiencing a lot of liquidity crunch. So I would suggest get in now. There's no reason to wait. That's my comment.
Yeah, absolutely. Thank you. I believe same thing. I'm talking with some economics. I'm also studying a lot. Yes, the situation is totally different than 2008-9 because it was a financial crisis. It was a mortgage crisis. It was a housing crisis. It's a totally different. And many of our client also asking right now, they want to buy the home. I'm self-employed right now. Can I still obtain the mortgage? Can I still obtain the loan?
Well, see, one good thing about self-employment is there's two things. Now, the self-employment guideline is this: if you have been in business for 5 years, and if you can prove that either through your tax return or with your letter from a CPA, you really need to submit only 1 year's tax return. And that income, whatever you're showing, should be sufficient for you to purchase a home. But there's just this week, as a matter of fact, today and yesterday, minor changes to that guidelines. You require now to have additional 6 months principal, interest, tax, and insurance reserve, and a letter from CPA saying that your current profit and loss statement is sufficient for you to purchase. So I would say that the self-employment, if you have 5 years, 1 year tax return. If you don't have 5 years in business, you will have to submit 2 years tax returns, and they will average your 2 years. So if you haven't filed 19, you can file 19. So then 18 and 19 will be averaged to calculate your qualifying income.
Yeah, thank you. Thank you for answering. It's pretty much myself and other people are very clear now. So, other question I have is a lot of people are facing layoff right now, and some of them they are temporary basis. They are onto government assistant, or they also getting some unemployment benefit right now. So how does it affect them to obtaining the loan in the future or to get mortgage when they buy the house?
Well, we get that question asked almost every day. People are very confused how to deal with that. Well, a lot of people have lost, and especially if we are addressing to our Nepali friends, Nepali community, a lot of them do have businesses which has to close, like salons and and parlors, which you really legally cannot keep it open, so you really cannot show any income from that. But here's what it is now in the underwriting guidelines: you could collect unemployment during this period if you got laid off and everything. And if you're going to pick up the employment again in a month or two, they will consider your 3 months unemployment income also. So if you resume your job again, say a month from now, you really have no problem. You will qualify. Only thing is they may average your income a little bit lower during the period you collected unemployment versus your regular income. But there is no issue. You could still proceed with the purchase,
So
provided that
that,
you do get
yes.
a job. You
Okay,
start.
so that is okay for being unemployed for a short period of time, but if somebody is unemployed for 6 months or a year, it can be the problem. That's right.
Well, again, if they collected unemployment during that period, 6 months, and then they got the job, then there will be no issue. But in order to close the loan, they must be employed at minimum 30 days at that time.
Okay, okay. Yeah, thank you, thank you. Uh, Other question I have is right now, like so many people they got layoff and they cannot pay their mortgage or they have a financial situation. So many bank, I think they're offering for the deferred payment or forbidden. So what, it is okay not to make mortgage payment, or if you don't make the mortgage payment, it can have a consequence or have a difficulties on your credit score.
Well, yeah, that is also a very confusing situation. And here's what it is. The Fed realizes that a lot of people may not be able to afford to make the mortgage payments for 2 months, 3 months, 4 months till they resume their employment. So they say that, okay, you can skip 3 months payment. It will have no effect on your credit. But here's the downside of it. At the end of the third month, you will have to make all those 3 months payment in lump sum amount. If you don't, the lender will classify you under modification. And if you got classified as under modification, it will affect your credit. Then your credit score will go down. So my advice to people is that if you're really planning to buy a house, you think you're going to have the income, just because this facility is available, don't worry about taking advantage of that because it's not going to do any good. Because in 3 months, you got to pay anyway. But if you have some difficulty at that time, you will totally ruin your credit. So, but if you think you just want to keep the money for 2, 3 months and you are capable of making the lump sum payment because your business will catch up, your employment will be, you might get bonus, whatever it is. But make sure that you have solid source of paying back at the end of the third month.
Oh, okay.
Let me, I'm going to elaborate a little bit more with that. See, what a lot of people really don't know, they think that's a great job government has done. But some people who really cannot manage money, they think they got this money and they spent all that money. And at the end of the third month, they would not have the funds to pay. That's where you're going to have a lot of credit issues. Foreclosures may start. We're going to have some mess there because not everybody may be able to come up with that money just because they need that money to spend on other things, food, or whatever their personal needs may be. So if we are addressing the buying side of it, I would suggest if you have the money, don't take that route. Pay it.
Yeah, thank
And
you. So yeah, if you
and
can
one more,
afford to pay, just pay it.
right.
Like you pay.
And I see what Fed has really not done. Of course, they're protecting the general public, but here's what happens. The servicer who you make your mortgage payment, okay, they still have to make that payment to the investors, regardless you pay or not. So just imagine that if thousands and millions of people do not make that mortgage payment, servicer will not have the cash flow to continue making payment till you resume. So that's going to create some issues in the future mortgages, and it will compound some other issues for the borrowers. The guidelines will change a little bit. The financing might be a little bit more difficult and things like that. So the government has not addressed the issue of the servicer. They have taken care of the general public. So that's another thing to think about.
Yes, I'm totally agree. You know, you can have a situation with people if they didn't pay because of credit issue, all kind of thing. Um, Other question I have, AJ, is is how is refinancing right now?
Well, see, the interest rate, see, actually what happened about 6 weeks ago, 7 weeks ago, uh, all lenders all of a sudden had a good liquidity, so they reduced the rate. And they did not realize that I mean, they were overwhelmed with all these loan applications. So they got to a point where they couldn't handle it. And then this coronavirus situation got a little bit worse. And then I have to kind of give you a little bit more background on how it works. All these lenders, when they do loans, once they fund it, they turn around and sell it, goes into the secondary market, then they get the new money again. So it's just like a cycle. You fund the loan, sell it, you get a new money, turn around. But now what has happened now, is the secondary market is a little bit tight. Fannie Freddie is not buying all the loan, or they're a little bit slow, and the other investors who are in the secondary market is also tightening. So they say, well, they got a little scared. How are we going to sell all these loans? So they increase the rate slightly to discourage a lot of loan application. But the rates are still very good. I mean, they're still much better than they were before. So I would say that it might have reduced a little bit on the refi, but still coming. And I really would strongly recommend whoever wants to refi, they should definitely do it. Don't go by or wait for another 1/8 better or quarter better, because things will get tightened up a little bit. A lot of people may not qualify because they are increasing the loan to value ratios and they're tightening up. And if that happens, you may see the rate below, but you may not quite qualify. And another thing I recommend people that if they can, if they plan to buy another property or do investment, do the cash out now, because pretty soon the cash out situation is going to tighten up. We are already seeing it. They're not doing a lot of cash out. They're increasing the rate if you are cashing out versus just the regular. So I would recommend if you refinancing, if you think you want to buy something or invest, do the cash out now. Or otherwise, if you just want to reduce your rate, we do a lot of no cost all day long. I would suggest people, if you're saving money, don't wait, because future we don't know yet.
Yeah, thank you. That's a great answer. Um, Other questions I have is many people in the community want to start their own business. They want to become self-employed, or they're gonna really, control their own destiny. Or they have a lot of dreams and goals they're gonna achieve for their family. In terms of right now, the financial situation, financial point of view, it is possible to obtain the business loan even now, or what is the difference between what is the difference between previous, like 3 months back, and right now?
Yeah, see what happened, as you know, that the government came up with a lot of the stimulus programs with the trillions of dollars. They launched this PPP, payroll protection plan, and they have to do 2 rounds of funding on that, in billions and billions of dollars. The second one, I believe, was $400 billion. That's also got exhausted. By next week, I think this is pretty much done. So all these banks, commercial banks, they were super busy handling that PPP programs. So, but now they have to resume back to their commercial lending. So they will be focusing now SBA loans and conventional commercial loans to businesses. And the government definitely is encouraging businesses to get the loan and resume their businesses as it's opening up. And some businesses will probably never open now, because there's a lot of, we call them mom and pop or small businesses. They just could not sustain. And a lot of people are, maybe they're, you know, at the retiring stage, they really don't want to deal with this hassle. So you're going to see a lot of businesses fail, or some voluntarily close. And that gives opportunity to the new entrepreneurs. So I would say that this may be a very good time for people to look and pick up the businesses where a lot of people may want to bail out. So I would say this, yes, if you really want to be an entrepreneur and you think that you want to be in businesses, financing would be available. So they should really start looking.
Yeah, thank you. Thank you. I really believe same thing, because a lot of great company in this country started like precision time, IBM, Microsoft, even Apple, even the Facebook. They really started and took when there was a downturn, because you can find very good talent. You can also lead space with the less price, there is a lot of opportunity. I strongly believe that. I think a lot of opportunity also coming. And other questions I have is many people they want to buy. They already have a primary residence. They want to buy the investment property or rental properties. It is still possible to obtain the loan to buy the rental property or
Yeah, now
commercial properties.
this is where I'm going to give a little bit of my opinion and some of the people I've been talking to. That area is going to be a little bit tough. A lot of rental property owners are experiencing that tenants are not paying. Some of them who could even afford it have chosen not to pay because they got a little bit of protection saying they cannot be kicked out, you know, they cannot be sued for a while. I believe that for 6 months you cannot really get them out of the property. And that will put pressure on a lot of people who own the small properties. If they have like 2 or 3 houses or this and that, and they have mortgages on that, that will be tremendous amount of pressure. So they may want to sell some of those. So there may be some opportunities on that that area. And I'm already talking to some of my friends who they're saying, "Oh God, the minute they heard about this COVID-19, they say, well, we can't pay. I mean, they know that they already have the income, but they decided not to pay. So landlords are facing a tough time, and they will for the next 6 months, 7 months, or 8 months. So I would say that if you are in the market to buy, hang on to your cash. Opportunities will come to buy those kind of properties.
Yeah, thank you, Ajay. Do you see any like effect obtaining the loan because like COVID-19, just qualifying with the bank or the guidelines, anything changes since January?
Well, see, you have to for the underlying guideline of income documentation would always be there. You have to show that you can afford to make the payment. So if you are temporarily laid off and this and that, which is fine, you will be able to get your loan closed only once your income resumes. But self-employed people have advantage over that because no one really knows when they close or they didn't close or whatever. But W-2 employees, it's very clearly that they would not have a paycheck because you need a paycheck as a proof that you have an income. So as long as you're going to get a job back, uh, say suppose you know for sure your employer said that, hey, regardless, I'm going to get you back uh, in 30 days, it's fine. But another good thing, about this PPP, Payroll Protection Plan, you'd be surprised how many employees have not been laid off. Even if they're not working, this PPP program works like this. If you're a businessman, you have employees, you take in 2019 12 months income, average it, multiply by 2.5 times, they give you that money. Then after 60 days, you have to show that you have not laid off anybody, or the number of people you had 2019 remain there. That's forgiven. So 2.5 months of your 2019 payroll is practically a gift to you. But you have to prove that you have not laid off anybody. So a lot of employees will, even if they're not physically working, they may still be in payroll. So that will not affect them. They'll still be able to get their mortgages and things like that. But the effect of the COVID-19 in the mortgage industry is some guidelines will change. Like I said, it's interest rate may not change, but down payment required might change a little bit. The credit score might change a little bit. So you will see some tightening there. And by the way, about the credit score, as you know, we we always suggest people that if it's a little bit lower credit, there's a system in which is perfectly legal to do the rescoring. Basically, you run your credit and check back again with the credit bureaus and see what they need to do to improve it. And you will get a printout saying that you do this, and it may show this much improvement. So I highly recommend people who have lower credit to bring that to a higher level.
Yeah, thank you. That means it's perfectly people can really obtain the loan, and they can purchase the property, either primary residence or investment property. That's right. Nothing
Sure.
much change.
Yeah, that's true.
Yes, thank you. Can you please summarize for our audience the COVID-19 effect in the financial market, or like loan market? Um, and yeah, can you please summarize? This is the last question.
Sure. Basically, this coronavirus or COVID-19 has multiple effects on just about everything in economy or finance, or, but especially on the finance side, what it is the lender's liquidity is tightening. So whenever, see, it's just like demand and supply. If you have plenty of money to lend, only way you'll be able to lend is you open the gate, make guidelines a little bit more relaxed, so more people qualify, more people can purchase and everything. But when things go other way, they tighten things up for the risk, because the risk factor comes in the picture. Right now, I tell you what's happening. Why I think that cash out on refi will start going, getting tight, because if there's a fear that the prices may drop, the lenders don't want to be in a situation where they lend today at 80% cash out, and 2 years from now they see that, oh, that 10% equity is gone. They don't want to be in a worse situation on a cash out situation. So those are the effects of, I would say, this coronavirus you will face, especially in the finance business. The rate not necessarily may go up, but the tightening of the guidelines will happen.
Yeah, thank you, Ajay. That means still it's a great time to buy. Still, you can continue buy the homes or investment property
100%.
you want. That's right.
100%.
Yeah, thank you so much, AJ,
All
for
right.
the
And
for
I
your
appreciate all the
time and
audience who's
great
watching.
information. Really appreciate. We appreciate you for your effort, everything you do
Yeah, and
to
we are
help the
here right
community.
here in
And thank you.
Cerritos. We're on Platinum West funding, and I'm sure you can reach us with 562-972-5083, and we can answer any of your questions. You don't have to do loan with us, but if you have any questions about anything, we have a great team here. We have best processors, and we have experience for years and years of experience in this industry. So we'll be glad to answer any of your questions. Thank you very much.
Thank you, and have a great evening. Thank you so much for
You
your
too,
time
and
again.
thank you
Take care.
having
Have
me
a
here.
great weekend.
Bye.
Thank you.
Any questions?